The world's largest hedge funds, being central bankers or IMF, talk about the markets, then the markets have to listen to it. And that's what we're talking about. We're not talking about inflation. We're not talking about employment. Christine Lagarde's comments this morning are all about financial stability. She's telling you she's worried about the liquidity in the bond market, which a couple of months ago Pete talked about, and I didn't believe there was an issue. There clearly is an issue. Look at the move we had, 17 basis points in the course of 1 hour. There's obviously some concerns in the marketplace. And overall, I think when that speaks to speculators, it tells them pay heed, because at some point when the market does roll over, it's going to be violent.
We're going to hear them come out and say that they're going to leave production unchanged. You're going to see their quota right around that 30 million barrels. Although they're continuing to cheat, they're still building about 1.4 million more. You see that? It's categorized on a miscellaneous column here. We're going to continue to see that 1 to 2 million barrels for the next quarter as well. There is a lot of talk about that Iranian sanctions. Once those are lifted, you should see their production ramp up to about 1 million barrels a day. And you're going to see that OPEC number. They're going to continue to gain market share. Eventually, they're going to start producing 32, 33 million. And as long as they can keep prices in that 57 and 55 level, they're going to steal market share from the U.S.
Liquidity is definitely an issue. We've seen a lot of money flowing into riskier type assets, high yield in particular. And those markets just can't really withstand a lot of heavy selling without the prices dropping. But that's really normal market behavior. If you have a lot of sellers line up, whether it's in stocks or treasuries or high yield, prices readjust. So I just see it more of about where the right price level is supposed to be, rather than the shocks in liquidity. So investors should just get used to a higher level of volatility. I totally agree with that.
I'm thinking we stabilize in a range, maybe somewhere between 53 on up to about 63. But north of 63, you start seeing Canada start to produce more, and the U.S., you can start to see wells come back online. So range bound, I got to agree with that $60 year-end target.